So let's bring in Belpointe, the Chief Strategist, David Nelson. You know, David, I love that you said it because the term on Wall Street is risk on when the market's up, risk off when it's not up. It seems to be the opposite, right? We had a table last week from 2009 to last year. Your pay, people's pay is up 11%. I'm talking completely real pay up 11%. Stock market up 500%. The greatest risk to me is not being in the stock market.
Yeah, this is why aliens won't talk to us. We buy when it's green, we sell when it's red. Look, we come into every year. There's always, risks and opportunities. And my job as an analyst and a portfolio manager is to recognize that there are a lot of opportunities out there, despite some of these things that we worry about day in, day out.
All right. One, of course, the opportunity I just talked to Rob about. You and I have had this conversation. What was once science fiction is now real.
Yeah, it's happening right now. I mean, we see it every day. I think probably the biggest thing that's underestimated, and you had it on your screen just a few minutes ago, you were talking about that Microsoft CapEx spend. That's enormous. That right now the current estimate for Microsoft's CapEx spend is about $62 billion. He's saying that they're going to spend $80 billion in AI data centers alone. That's a big deal.
So let's talk about that for a moment, because last year Wall Street kept saying they can't do it, they won't keep spending this kind of money, but they are, these so-called
They're obviously still doing it.
And also we're starting to see reactions, right? We're starting to see companies saying, hey, technology has allowed me to do this and allowed me to that. It's starting to work its way into the economy.
Productivity boosts the multiple. You can pay more for it. It doesn't mean that we don't have challenges, but this is probably, the biggest thing, certainly in my career, probably in our lifetimes.
Let's talk about global debt. Yeah. Something you do have concerns, right?
Like we do have concerns.
You're paid to manage risk, and this one of your things is the global risk, $315 trillion around the world. It does seem interesting because I always talk about like this 2009. It's not on this chart, but that's when our markets really took off. And it feels like that's when we got even more creative on the debt side, if you will. Government debt, household debt, whatever it is. Is there a correlation there? I mean, are we enjoying some of this stuff? We're enjoying just the fact that so much money is being artificially pumped into the economy that it comes through in sales and balance sheets, but it may not really exist, or someday they have to be paid back.
Yeah, and we actually end up pulling forward the returns. We accelerated, the debt accumulation in 2008. After the financial crisis, and then again in 2020. But now we're kind of making it the baseline, and we're thinking that that's normal. It is not normal. And every bull market has an Achilles heel, and the Achilles heel for this market is the long end of the yield curve. And
right.
Every time we start to see 10-year rates start to push towards 5%, markets take a step back.
So here's an interesting chart I want to share with the audience. This essentially is the sensitivity of assets to inflation data. On this side are bonds, extremely sensitive to economic data and inflation data. And Friday we've got the jobs report. But recently the stock market has become far less sensitive to inflation data. Has the stock market prematurely written off the inflation threat? Is there something that maybe this is the right move and we shouldn't be so concerned about it?
I think, it becomes more challenging because the hurdle rate is that much higher, but it means that the earnings has to be that much higher. And maybe the market is telling us something, that the earnings growth is going to be better than we thought.
Before I let you go, a couple of stocks here. You like Chewy?
This one is anecdotal. I go down and get my Amazon packages every day. Nothing but Chewy's boxes. You don't have to be a rocket scientist here. Everybody has a dog. 64 million households have at least one dog. This company's going to do well.
And HPE.
And this is, of course, the AI infrastructure play. Right. That $80 billion, they're going to get some of it. And at 10 times earnings, that's pretty cheap. Even a value investor can love it.
Good stuff, my man.
Thanks for having me.
Happy New Year.